Good morning, Mr. Patil. Right on time today, indeed. I'm just setting myself up though on LinkedIn, so not really. But yeah, at least we try. So I am live on LinkedIn. I hope you can hear me. I'm live on YouTube. Just set myself up. 72nd episode. Second. 72nd. That's also a pretty funny number, right? If you know, you know. 72nd. Done. Seventy-two. Perfect. Done. Beautiful. We're ready. You can hear me on YouTube. I'll just check myself on LinkedIn. Perfect. I am perfectly audible on LinkedIn. And so we should begin the show that we deserve. The show that we deserve. We deserve it, right? It's that good. We deserve it. We deserve it, folks. Take your front seats, get your comments rolling. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We are having such a good time. This is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, a daily mental workout, a daily dose of insights and analysis which don't lead to paralysis right before we start our day. So let's continue with our journey of reading between the lines things that are especially interesting and important in the world of business and finance. Let's go. Oh, but before we go, we got to follow a tradition, right? You know the tradition? The sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it does every day without fail. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug or flask or a vessel of any kind. Pour it with your favorite liquid. Today I'm having water, hot water, with some black pepper in it. No surprises there, right? And here we go. Oh my god. Beautiful. Healing. Let's do it again. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we're in this together. And that's such a beautiful thing to say. With that out of the way, let's begin. Good morning, Mr. Taran. Good morning. Before we begin, I'd like to thank you all at Thinker's Frequency. For a long time, for 72 days, I just figured how I'm gonna pay for this thing, right? Thinker's Frequency takes a lot of time. You gotta wake up at 5:30. You gotta start your day at 6:30. Gotta prepare for 1.5 hours, read, do your research, then go from 8 to 9. And then you begin with your day, right? At 9:30, 10, you start your office. So I was thinking like it's heavy effort, man. And in order to sleep, in order to wake up at 5:30, you got to sleep at, let's say, 11, 12. So the schedule gets clocked and it's complicated and it takes time. So I was thinking, how is it gonna pay for it, right? And even though I do not need the money per se from this, but it still was an investment of time, and time is money. And I was thinking, how am I gonna get this money back? But ever since I've started Thinker's Frequency, it's been a very profitable enterprise, even with respect to money. Uh, Speaking of that, if you remember, just a week ago, I had told you uh, about Aether. Do you remember, folks, viewers of Thinkers Frequency? I had told you about Aether. We had a very big discussion about Aether and Ola. The moment when Ola and Aether's difference in vehicles sold came down to, let's say, 1600 vehicles. And then I went into a history of Aether and so on and so forth. Now, I had read about Aether long ago. I told you that I read a book called No Shortcuts. But until that point, because of Thinker's Frequency, until that point, I hadn't really taken a look at the stock, right? But that day, I actually went ahead and took a look at the stock, and I booked it. I won't say what amount, but then in just less than a week, actually, it returned like 20%. So I need to thank you because this activity has not just been intellectually stimulating and pretty good routine wise, it's also a profitable activity. Ether is just one case. Viewers of Thinkers Frequency would remember how we've been able to see how the market is moving, right? And as uh, that movie Margin Call, the Jeremy Irons dialogue, that you know how why I make the big bucks? I make the big bucks because I see where the market is moving, what beat the market is gonna play a day, a week, and a month from now. And that has really helped me personally. I don't know how many of you actually took that position yourselves, but if you did, congratulations. And I'm sorry, like I hope Sebi is not watching. This is not a stock tips show. We don't discuss stock tips here. We just discuss the overall economy. And please don't send me a notice. Moving on. Witkoff set to visit Russia tomorrow as Trump's end war deadline nears. Uh, so Trump has been moving forward with the ending war scene. He wants to be a peacemaker. And what he's been trying is that he's given a 10-day deadline to Russia. That's coming to 4. And what said Witkoff is the representative of the government. He's gonna meet Putin, right? And they're gonna talk about ending the war. So there was some rhetorical escalation from the previous administration, previous chief of Russia, Medvedev. Mr. Medvedev said that US shouldn't be talking about ultimatums because US has no position to give us ultimatums. And then, Trump said that since you're talking nuclear, I have placed nuclear submarines in the region. Now, nobody knows whether they've placed nuclear armed submarine or nuclear capable submarine, but US says that it has placed submarines in the region. Now, this is serious escalation, but they're talking, and this escalation is moving forward in different ways because we've discussed how India is getting caught in the crossfire and how US is desperately wanting to end the war, how Russia has its own agenda because it's suffered a lot and it wants payback and it believes it can get that payback, but all of these things are essentially moving forward. In this particular game, uh, you know, uh, what's remarkable is how Russian diplomacy is talking so professionally, so you know, calmly, and they're talking with a lot of grace. And what they're saying is that uh, when you US is responding emotionally to this issue, and a lot of people when they look at this analysis in politics, they have their own agenda. Mr. Medvedev has his own thoughts, his own reading of the situation, his own personal attitude towards reading of the situation. But what matters is what Mr. Putin says, President Putin says. And we are looking forward to that. So very, very restrained response to Trump's rhetorical escalations. So let's see what happens there. Mr. Tiwari says Russia too deployed in their submarines to US. Source Twitter. Well, I can't confirm that. It's not been confirmed. To be honest, Russia cannot deploy their submarines in US waters, because that will be an escalation of a different kind. Because US bringing a war to Russia still sort of makes sense, because Russia as an empire has declined economically. So, it'll be an indirect attack, but it's still an attack and Russia will handle it. But if Russia moves towards that, the cascading effects, or let's say the second order effects of that, are just going to be extraordinary, and it's hard to imagine. So I don't think Russia has placed its submarines in those waters, but maybe not. Who knows? Speaking of what we know, is that uh, Tesla is really losing its grip on China. China sales fall 8.4%. So Tesla is really looking at a real trouble as far as Chinese EV market is considered. Now everybody knows that China's car market is the largest in the world, especially viewers of Thinkers Frequency. We also know how big is India's market. It's about 40 lakh cars, 4 million cars. China's market is that 32 million cars, that's 3.3 crore cars, almost 32.9. So China's market is this much. And China sells in 2 months what we sell in a year, essentially. And China's EVs are extraordinarily progressing as far as technology is considered, as far as market grip is considered, as far as global positioning is considered, pricing is considered, and so on. And it seems like Tesla's troubles are not ending in China, right? Well, there's a very good movie, by the way, uh, of Tom Cruise. Oh, sorry, Tom Hanks. It was it was about a guy who goes to Saudi to pitch for his company's products. Okay, and he talks about offshoring his you know productions to China, and then China essentially learning the same technology and copying it, and then essentially beating America on price and winning that contract. Something like that. Beautiful movie. I'm not remembering the name, but one second. Let me just find out. Tom Hanks, Saudi, uh, Saudi Arabia movie. Yeah, A Hologram for the King. Yes. Good movie, 2016. And something similar happened with everything. Wherever they offshored, wherever they transferred their manufacturing heft, China essentially learned that, as it should, and made their own brands, stole the IP, and then beat the people on price. Right? So that's what's happening, not just in Chinese home market, but also in the larger market of automotive industry. Tesla is giving a $30 billion retention bonus to Mr. Musk. Essentially, retention bonus is basically his payment. So this is very interesting, by the way. Uh, Mr. Musk was supposed to get a $50 billion award. Okay, he was supposed to get a $50 billion award for running Tesla, for making it a $1 trillion company, and so on and so forth. But there was a shareholder lawsuit which happened. A very minority shareholder who said that he shouldn't get this money, right? Now, this lawsuit went into the Delaware court. Now, Delaware court had sort of a Democrat judge, and that judge essentially ruled in favor of that shareholder, uh, you know, case. So Mr. Musk didn't get that money, right? Which turned out to be a very, very big issue. He said that move your company out of Delaware, move it to Texas, because these people are literally interfering in companies' matters. They're not paying me. I was supposed to have this reward when I took the company to a certain milestone, and now that all those milestones have been met, I'm not getting paid. This is ridiculous, right? What if I leave the company? What are you gonna do then? Is somebody else gonna run Tesla? You're all gonna get screwed, right? So every shareholder was like, no, 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 we don't want that. So something happened. They shifted, their incorporation in Texas, and now he's getting a $30 billion retention bonus, which is $30 billion is pretty cool, right? For a payout. In the meanwhile, uh, Tesla's brand loyalty, something that they measure perhaps by surveying people, collapsed after Mr. Trump got shot in the face in the year. And when he supported Trump, Mr. Trump, his brand loyalty collapsed below the industrial average, even though it was way up before. And then when he raised his political stakes, the brand loyalty kept falling. But then when he went opposite to Trump, uh, till the time he was Doge, and when he got out of Doge and we started again talking against Trump, his brand loyalty came again. Something tells you about what does this mean? Does this survey actually mean anything? Does brand loyalty actually change like that? Uh, if brand loyalty is changing like every month, is it really brand loyalty, or is it just a BS survey, done to waste people's time? This is a question that we might like to ask ourselves. However, a lot of news around Tesla. $240 million, lawsuit lost, order to pay 240 million to for that autopilot car crash. So that's that. A lot of news around Tesla. Similarly, there's also a lot of news around China. China has an overcapacity of solar, right? If you remember, China developed solar like anything. They just went crazy on solar. They have more solar capacity than the entire world combined, right? Some survey said, or some report said, that China made more solar last year than US has ever made, right? It's just extraordinary. The scale is just next level. Now they're facing a deflation as far as the solar energy is considered. So they're not being able to sell their solar energy components and tools and technologies because there's an oversupply in the market. And the rest of the world is essentially protecting itself, just like it protects itself from Chinese steel, right? Similar is the case for Chinese steel. China makes more steel than the entire world combined. So the countries have to protect themselves with anti-dumping duty. Something similar is happening with solar. Now, if you remember, viewers of Thinkers Frequency would remember, we talked about what's gonna happen as far as energy deflation is considered. Do you remember that? I told you that right now there's an energy surge. The requirement of energy is surging at this moment, and there's gonna be a time when the supply of energy also starts catching up, and it's also get gonna surge, right? With solar, with hydel, with nuclear, the supply is gonna surge, and then there's gonna be a time when the demand for energy will come down because of efficiency kicking in as far as the semiconductor and electronics place considered, right? These things are going to get more efficient. They can get more efficient, so they will get more efficient. And as they go, they become more efficient. You're going to see two things happening all at once. You're going to see a rise in energy production and decline in energy consumption, which will lead to deflation of energy. You remember that? You remember that? That was just, you only heard it here, right? Remember who said it first. Now that particular bit, as far as solar play, is already happening. Uh, and yes, Mr. Chirag Patil is right. Yes, they will get more efficient, but we didn't consider the rise in demand due to new technology, because that new technology is nowhere to be seen. So at this moment, you're basically looking at AI, which is the paradigm shift, and which is going to be the paradigm shift for the foreseeable future. So you do not know. And you know let's see, maybe space exploration starts taking in a lot of energy, we never know. But at this moment, this is happening. But this particular prediction, which was supposed to be a mid to long term prediction, let's say 5 years, 4 years, or something of that sort, maybe even more, because nuclear energy is going to kick in 7 years or 10 years at least. So this has already started happening. So, you know, way to predict. Anyway, uh, and I'm not saying that Chinese energy prices have started deflating as of now. What I'm saying is the Chinese component prices have started deflating, the stole up prices, which of course means that someday, as they deploy these things internally, the energy prices will be the next to follow. Moving on, US has laid another, uh, you know, struggle, or let's say challenge for people entering the visa, through the visa gateway, essentially entering US. That's a $15,000 bond. $15,000 is essentially 12 lakh rupee. So 12 lakh rupee bond, and they're gonna lay it down on countries which are known for visa overstay. So $15,000, 12 lakh rupees. They say that this is gonna make it unaffordable for people to go to US. I don't believe it. I believe nobody poor essentially goes to US in the first place, and somebody who's shelling out a crore or something to go to US for masters, you know, taking a loan, no, they wouldn't mind spending 12 lakhs more on the visa. So it's essentially squeezing the rich. How does that sound to you? Does that sound good to you? Maybe it becomes so hard to go to US in some days, then we'll see that all the desi guys who were going to US, unko, they'll suddenly start remember desh ki mitti. Desh ki mitti unhe खींच लाएगी. Maybe we're gonna see that, but for now, I don't think this is deterrent enough. Moving on, IOC, Indian Oil Corporation, is buying crude from US, West Asia, as Trump cries foul. Indian refiners may have to look at new markets because of whatever is happening as far as this tariff situation is considered. So India accounts for 1/3 of Russian oil exports, where China accounts for almost 50%. So India is at 33%, China is at 50%. And before the start of the war, it was $5.2 billion India's imports, but after the war, it is $56 billion. So 10 times we've grown the, imports. Things are getting complicated. Russia has ended its self-declared moratorium on missile deployment. So a lot of rhetoric and positional strength getting displayed from both sides. Let's see what happens. In the midst of this, the title says India strikes back, targeting unjustified. So it's nothing. India is basically saying that, hey, why are you castigating us, man? Europe has like a $65 billion euro. The European Union has a $65 billion euro trade with Russia, and it's going on. And what we are doing, US was earlier supportive of it. They said that it's going to lead to balance in the global economy, right? Because if there is Russian oil which is not going anywhere, it's going to be bad for the economy, right? So somewhere, since US is dependent on Russian energy, they had to take a route, and we are that route. So our stance essentially was supported earlier. Why are you castigating us, right? And that's what's happening with the whole India, Russia, US narrative. Very, very complicated. It all rests on how and when the war ends. When the war ends, all of these things will start subsiding one by one. But till that happens, it's gonna be heat. It's gonna be heat. A lot of heat. Moving on. 20,000 crore export plan likely by September. So, viewers of Thinkers Frequency would remember we discussed how the exporters were talking about support. They said we need support, otherwise we're screwed, because our exports to US will get demolished, right? With the whole tariff situation. And we are at 25% tariff when Vietnam, Bangladesh, everybody is in a more favorable situation. We need help. And the government said that you need to make brands in order to support. They were also thinking of hiring support with other countries. They said Ecuador has less tariffs, but they won't be able to suddenly create capacity to use those tariffs, that tariff advantage. maybe you need to get involved with Ecuador, but now by September, the government is saying that there's going to be a 20,000 crore export plan, which is essentially an incentive scheme, credit scheme, so on and so forth for the exporters, which will likely hit by September, and that's when they assume that the whole tariff situation will start hurting people, right? So that's what's happening. Very, very necessary, and the government is responding in real time, which is good. But obviously, this isn't the good news that we need, right? The good news that we need is that the war needs to stop. And the rhetoric which Mr. Trump is saying, that nobody cares about how many people are getting killed. People are getting killed every day, and India is just buying cheap Russian oil, right? So this is not done. While this rhetoric makes sense, emotionally speaking, but how does it make sense economically when European Union has a bigger trade partnership than with Russia than India, right? It doesn't make sense. So India's perspective is also right. Let's say if you're really serious about not killing people, and if you're really serious about hurting Russia economically, why don't you stop trading with Russia, right? The European Union, and to that they don't have any answer. Moving on. Uh, Digital payment companies NPCI are seeking pause on consent clause. So right now, users when they enroll in subscriptions and so on and so forth with the uh, you know on using these financial aggregators and UPI and stuff like that, they are supposed to give their consent before a transaction, even if it's a subscription. Now, this particular thing, the transaction getting re-authenticated, let's say every month, is a thorn up you know these people's rear, because what happens is people end up canceling a lot of subscriptions, right? So what these people want is that they want a no consent clause, that you just let us process payments, and the uh, perspective that they're spinning is that this clause is hard to meet, because small startups and small businesses who are using these payment technologies will not be able to will not be able to navigate the tricky waters of clause per transaction. So they say make it easier for small businesses so that they can run the company. But the real reason is that they don't want people to be consciously canceling payments, and that's why they are essentially, fighting to remove this chapter. Industry worried about rules on recurring payments. Data law mandates fresh user consent even after an initial one-time mandate. Companies fear that could disrupt digital payment workflows. So all this spinning always happens. Want exemption from mandate for each transaction for now. For now, they're saying for now. Mr. Tushar Tiwari laughs. I don't know. Did I say something funny? Unintentionally? That's the problem with my humor. It's mostly unintentional, the good one. While I want to be funny intentionally, the most laughs I get are on the things that I just crack unintentionally and in all seriousness. So that makes me not a good comedian. For now. For now. Anyway, moving ahead. Of course, there's a lot of chatter as far as Mr. Anil Ambani is considered. ED to grill half a dozen current and former top executives. Well, this is not going anywhere, man. A related party relaxation. SEBI mulls tweaking rules to make it easier for companies, as far as thresholds of turnover are considered, to have related party transaction, because it's compliance overload. Let's say a company is small. Why does that company need to have the same regulatory overhang of a larger company, a much larger company? So SEBI is doing that to promote ease of doing business, essentially, right? Materiality thresholds tied to turnover capped at 5,000 crores. Subsidiary related party transactions over 1 crore need audit panel nod if limits are breached. Transaction below 10 crore or 1% get relaxed. very necessary. These kinds of transactions, especially for uh, you know a limited turnover companies, don't make sense. Uh, Moving on, super luxury car buyers pause for FTA signal. Uncertainty grips the 2000 crore car market as UK India deal set to revise prices. Dealers stare at piling inventory. So, a great deal happened, right? The UK FTA deal, UK India FTA. Now that UK India FTA essentially hasn't been set in stone, right? It's been set in stone, but the it's unclear when it's gonna kick in. So a lot of super luxury car buyers in India are just waiting for those that clarity to emerge, which is causing problems to the dealers who have piling inventory, right? When things stop moving, uh, it becomes a problem, right? The front loading issue is a good thing, delaying is a bad thing. So that's a bit of a problem, because when things delay, let's say 3 months or 6 months or something, what if new inventory comes along? In that case, this old inventory will never get sold, right? Because these purchases sometimes are very timing oriented. So that's a big problem. The insight is that India's ultra luxury car market is worth 2000 crores, you know 2000 crores. 2000 crores seems very small, man. It's pretty small, right? The ultra luxury car market. Prices may drop only 30% despite big duty cuts, and so on and so forth. Even with the small drop in price, the transactions have declined by a lot. By a lot. Moving on. Mm-hmm, mm-hmm, mm-hmm. Okay. A lot of political chit chat, which is so disgraceful. Whenever anybody wants to feel optimistic about the country, all that person needs to do is just read the political page or just read something related to politics, and all that optimism suddenly disappears as if by magic, because the conversation, the discourse is so poor, is so poor that it's just, not worth discussing at all. So, US effective tariffs on Indian goods jumped to 20% from 2.4% last year. So, people who were thinking that how much of the tariff situation has actually hurt India, the effective tariff rate on uh, only 30. The US effective tariff rate on Indian goods rose to 20% in 2025, up from 2.4% in 2024 due to addition of 18% increase this year, according to Fitch ratings. So, Goldman Sachs has essentially uh, downside risk, given a downside risk to the economy. One, because of the lowering trade, and second, because of the uncertainty. So, the 2025 forecast has come down to 6.5%. So that's that. In the meanwhile, ministry is also helping the textile exporters in always necessary as a part of that. Mr. Patil says only 30. 30% is a lot of money as far as the luxury car segment is considered. Well, you're right, but that's how they're positioning, right? That's how they're saying. Just it's only 30%. Only 30% of, let's say, 3 crores. How much of that is like 60 lakhs? Come on, man. Come on. Buy a Rolls Royce right now. Move over incentives, Niti for mandates in EV policy tweaks. They say the electric vehicle manufacturing incentive scheme, they're saying that it's whatever has been done, it's gonna unlock a $200 billion opportunity, but you've got to look away from the incentive scheme and the subsidies and so on and so forth. The Niti Aayog called for a shift in approach towards EV and moving from incentives to mandates and disincentives with a focus on high potential vehicle segments and geographies. So it's coming out with a report saying unlocking a $200 billion opportunity, electric vehicles in India. It says right now EV sales are a total of 7.6% of the total vehicle sales, and this will need to go up to 22% by 2030. So 7.6% in 2024 to 22.4% in the next 5 years. That's quite a big jump. And please note that 7.6% is not the consumer car, the passenger vehicle business. No, it's the overall business, the three wheelers included and everything, right? So people might just get confused. But Nishant, you said that it's 2.2%, it was, and now it's 4.4%, and you're not saying 7.6%? It just increased by 3% in like 30 days? No, this is the overall game. They're saying that this needs to get to 22% of overall sales as far as the Indian car market is considered. Can you guess where China is? Now, viewers of Thinkers Frequency would know we discussed where China is as far as the overall EV share in the domestic car market. I'll take a sip till you can write the answers. 50%. Mr. Patil, you're so right. It's for 50%. So China has really nailed the EV revolution. They really went ahead, like nobody else. And that is basically not surprising at all. Uh, Road Ministry is looking at hitting the pedal to the metal for 923 ongoing projects. A total of 81 road projects were completed in June quarter, amounting to 69.8% of 116 infrastructure projects. Road Ministry of Road is estimating a total expenditure of 7.7 lakh crores for completing these projects. So a lot of money getting spent on roads, strict monitoring at play. We discussed about this in depth on why road technology, or let's say road quality, had decreased recently, right? We talked about Mr. Nitin Gadkari's admission on the problem, which was great, which was beautiful. So now they're saying that we're going to be very, very vigilant about bad road quality. Speaking of roads and EVs, Delhi, Maharashtra, and Chandigarh are the top three electric mobility players. The electric mobility index has really pulled them up, which is no surprise, right? Delhi, Mumbai, Delhi, Maharashtra, Chandigarh is the highest per capita place in India after Goa. No surprise at all. No surprise at all. Speaking of no surprises, GIFT has done well. The GIFT City project, which is essentially a financial hub. India says, the ministry and experts say that we need more gifts. So there's one gift in India. China has 10 of such hubs. So we need more gifts, are saying. So you realize whenever something good happens, two responses happen. Instantly there are two responses that come out whenever something good happens policy wise. Can you guess what those two responses are? We've talked about this. Right? The two responses that always come whenever we talk about some good things. Why didn't you do it earlier? Says Mr. Patil. You're 100. And why not more? Yes, Mr. Tiwari should have done it before. These are the two things which you'll always hear. Why didn't you do it earlier? And why not more? If these questions are being posed on policymakers, right, this means that something really good is happening. Something really good is happening. Why didn't you do it earlier? And why not more? These are like good problems to have. People are often asking, like, there are a lot of problems, man. There are a lot of problems in business, in economy, in policy, in politics, and so on and so forth. But there are good problems and there are bad problems, right? There are good problems and there are bad. Not all problems are same, right? So good problems are essentially like too much money, right? Too much investments, too much of opportunity. That's a good problem. You have so much money, you don't know where to invest it, or there's so much of good stuff happening, you don't know which one to pick. Bad problem is that there's nothing happening, right? It's just a piece of shit. So These two questions, that why didn't you do it earlier and why not more, is signal that you are facing good problems, which is very nice. Mr. Patil says, if you have time, can you explain gift and how we are benefiting? So you are, thank you for the courtesy, Mr. Patil. It's going to be a long discussion on gift and how exactly it helps. But I'll just tell you a long and short of it. That is that it's basically they've created a zone which has sort of different financial regulations as far as the rest of India is considered. Uh, so the compliance overload is radically different as far as that gift play is considered. It's basically like Mauritius in India. People who come through the gift city, they do not need to go to, let's say, Mauritius or tax havens of that sort, because there are tax exemptions, there are financial incentives, there's basically greater access to the capital markets. Now, devil is in the details, right? These are very superficial sentences, right? Tax haven, tax exemptions, financial incentives. These don't say anything, and I'm sure that's what you mean, right? You don't want a generic answer, but for that we'll have to really sit down, and it's 8:44 already, and we won't be able to cover it. But if you've asked for it, let's have a deeper discussion on this tomorrow, right? We'll study gift and in depth, and we'll talk about how gift essentially works. The long and short is something like that, that companies who register in gift essentially get many incentives. They get greater access to foreign markets as well, and so on and so forth. So a lot of VCs are also setting up shop in gift. A lot of foreign investors are also setting up an office in gift so that they can get greater access. So they're basically making a financial hub, sans the regulatory overhang, to attract a special kind of capital market investment. So that's what it is. But the devil is in the details, and we'll have to look at the devil very carefully, right? LTI awarded LTI Mindtree, Larsen Tubro Mindtree. Larsen and Tubro bought Mindtree in a hostile takeover. Mindtree was a phenomenal company started by Mr. Sutta, and there were 8 founders. One of them was Subroto Bakchi. Now, Subroto Bakchi, Mr. Bakchi wrote a lot of great books. The best books on Indian entrepreneurship, perhaps. High Performance Entrepreneurs, Elephant Catchers, Sell, Go Kiss the World. He's written a lot of good books. I've loved his writing. He's actually a very good writer. The company was taken over by LTI in a hostile way. LTI Mindtree has been awarded an 800 crore PAN 2.0 project. So as expected, a win for a mid-market player. Uh, Moving on, Bosch has acquired 74.2% holding in Johnson Controls Hitachi India. Johnson Controls Hitachi India, JCHI, is an AC company. It had revenues of around $3 billion, 2,700 crores or something. Yeah, 2756 crores, $3.2 billion. The company has been bought at $8 billion valuation. That is essentially, like, how much is the multiple? Less than 3. It was like 2.5, 3 multiple. They bought it. They are actually looking forward to an AC play using this particular unit as the base of global operations. So it's a big deal. It's the biggest transaction for Bosch. Bosch is a huge German company. Robert Bosch GmbH. They've literally entered the scene. 74% bought already. 25.75% to be bought in an open offer. The 700 crore revenue led to just 60 crores in net profit. So the company was really struggling to make money, right? Not good. Not good. So, moving on, the in continuation to that story, we the branding hub. India is also looking at an Alibaba approach, which was the e-commerce play. I forgot to tell you that. Speaking of something that we've already talked about, uh, that is the paint business, right? We've talked about how the crowding of the paint business is essentially going to be a bit of a trouble for the existing players. Kansai Nerolac's Q1 report came out. Net profit slips 4%, right? Subdued sales growth, revenue rose 1.8%. Now, what did we tell you? What did we tell you? And why did this happen? Now, paint companies saw the entry of Birla first, and then Akzo Nobel acquisition by JSW. Those two players are very, very large, heavy pocket players as far as the Indian market is considered. JSW bought the Dulux brand, and Birla entered the paints business, which led to stress in the top three players, top four players. Top three is, of course, Asian Paints, Berger Paints, and then Kansai Nerolac is amongst the top five as well. So, tough times ahead for the incumbents in the paints business. Moving on. Moving on. Small caps drawing a lot of money. Uh, Indian stock market is likely to go 89,000, says Goldman Sachs. Goldman Sachs says that the Sensex is gonna really kill it, which is nice. And small caps are drawing big money. So some astonishing numbers as far as small caps are considered. Uh, Mid-cap funds returned an average of 21.3% over the last 3 years and 27.3% over the last 5 years. Okay, that was mid-cap funds. Small cap funds returned 21.9% in 3 years and 30% in 5 years. So investors are looking at small caps, retail investors especially. 20,000 crores have flown in by retail investors in small caps in the first 3 months of this financial quarter, which is a lot of money, right? 20,000 crores. So small cap is essentially PE ratio is 32, which is not bad, and which is leading to a lot of action. Aggressive investors should allocate only 10 to 15% of their equity to small caps, say the investors. Well, no surprise there. It's very risky. However, small caps have been doing exceptionally well. And this has a lot to do with the IPO story, because the more public offerings going into these small caps, a lot of small caps are essentially showing a lot of growth prospects, and they're coming under the radar for a lot of people, right? So this is amazing. Uh, Tata Motors emerges as the most widely held stock. Yes Bank close on the heels. Well, Tata Motors has been a good stock. That's why it's been held well. It's been held by people a lot. Has been a good stock. Not saying that the future holds the same news. But do you know why people have held on to Yes Bank stock? Can you guess why people have held on to the Yes Bank stock? It's not good news, right? Now, people have held on to the Yes Bank stock because it's basically written off. The value has been written off. Yes Bank's stock was at 430 at its peak back in 2017, 430, 440 or something, and now it's at 10 bucks, right? So whoever had that stock and lost money on that stock, they felt like it doesn't matter if they touch them, right? And some people, of course, may have come around for the turnaround story, because now Yes Bank is going to get acquired by the Sumitomo Bank, you know. But that's what's happening. Mr. Tiwari says earlier there was an RBI restriction for Yes Bank that people couldn't really sell, but that was just for a year or so, till the time SBI essentially was taking over that bank. But after the rescue mission, even then, people have not really sold the bank, because what to do with that money. Let's say if somebody had like 1 lakh rupees invested in Yes Bank, right? How much would that 1 lakh rupee be right now? The stock is now essentially 2.5% of what it was, right? So it's gonna be $2,500. Why would that person even sell that stock? is the is the question. What's gonna happen, right? So it's a very widely held stock, and that makes sense. Sensex can soar to 89,000 by June, says Morgan Stanley. A brokerage sees a case for re-rating. Some good numbers here, important numbers. While foreign portfolio investors positioning as its weakest, retail investors are not going anywhere. And the price to earnings ratio is also going to be up. So these two factors, that overwhelming support by the retail investors and improving price to earnings, are leading to Sensex prospects going up, says Morgan Stanley. Now, this was a conversation, right? That our Indian incorporation gonna see the rise in PE, which is necessary to sustain the elevated stocks, right? The answer is yes, to an extent. Earnings haven't been that great, but to be honest, Indian stocks aren't really overvalued right now, right? Buffett indicator is at 133, 1.33. 1.33 is nothing, right? An overvalued stock looks at like 1.6 or 2, you know. At the moment, US is at 1.9, right? That's overvalued. India is not. So it's cool. And it's good that Sensex can soar to 89,000. Nothing surprising there. Moving on, some IPOs happening. NBFCs are requesting RBI for a lower risk weight on loans against property. So they say that loans against property, that is LAP, has a lower loss ratio, has a lower default rate, and has a lower risk ratio, risk rating, as compared to unsecured loans and so on. So why, is the risk weight still high? If the risk rate for loans against property goes down, more lending will be happening, and with higher lending, you will see a further fillip to the real estate industry. So perhaps if this request goes through, you're gonna see some sort of good action as far as the real estate play is considered. Speaking of interesting things, the government has come out saying that ethanol blended petrol, the E20 petrol, doesn't hurt older vehicles. Now, this is radically opposite to what actual users of the car say. Actual users of the car say that ever since this ethanol blended petrol has been coming along, the mileage of my car has gone down and the wear and tear has gone up, right? And they say that this is what I'm feeling. But these people say that we've tested this, we've done a lot of tests as far as this is considered, refuting media reports on the potential negative impact E20 blended petrol on such vehicles, say that are largely unfounded and not supported by scientific evidence or expert analysis. Right? Scientific evidence or expert analysis. They're saying that material compatibility and drivability tests by Automotive Research Association of India also have confirmed that legacy vehicles showed no significant variations. Now, this particular, right? Whenever you see somebody talking about science or expert analysis, and they say that this is not happening, science doesn't say it, when the science is radically opposite to somebody's personal experience and anecdotal evidences which are going everywhere, right? It's just, as Mr. Tushar Tiwari is saying, bullshit cover up. It's just a bunch of BS, right? Whenever somebody resorts to the science argument, like the science and expert analysis, they are not really supporting the evidence that what you're seeing, with your own eyes. Just know that the science can be fiddled with, and if the science can be fiddled with, if the data can be fiddled with, where else is the data getting fiddled with? Is a very good question to ask. And the answer to that question is a very obvious industry. Do you know that industry? Where data is often fiddled with and science comes to the rescue of the big companies who come with great claims. And then suddenly people start saying that, hey, I'm facing this is happening a lot. And they come up with a lot of elaborate science explaining that it's not what it seems like. Can you guess the industry? Can you guess the industry? Mm-hmm. I'll just take a sip. Come on, you know this. We've discussed about this. We've discussed about this in depth, right? With a lot of cases, with a lot of new products coming in, with a lot of, yes, pharma. Mr. Tiwari, you're right. Research in pharma, Mr. Patil, Mr. Tiwari, you're 100% right. This is what these people do, right? All the time. Oh no, this particular drug is totally safe, says science. The expert analysis has concluded that this particular case drug has nothing to do with this particular problem. No, nothing to do with that. Science is saying that. Then they start quoting you some research papers, and then you figure out that, hey man, when it came to research papers and when it came to peer reviews, half of those peer reviews, in fact, not half of them, majority of those peer reviews have been paid for by the pharma companies. So how are you really touting and doubting on the anecdotal evidences which are being seen by people en masse? So it's not just one case or two cases which confirm somebody's biases. It's like a horde of evidence which starts piling up, and then somebody says, oh no, this has nothing to do with this. Suddenly the heart risks are because of stress. People were not stressed like 3 years ago, 4 years ago. People suddenly started becoming stressed. People were not unfit 4 years ago. People are suddenly unfit now. People's cardiovascular health was not bad 4 years ago. It's suddenly bad now. And that's why we should be very thankful for people like Mr. RFK Jr., who come out in the open and tackle the whole science crusaders by offering alternate science. Right? It makes sense. We discussed that autism case he discussed, right? The massive, beautiful, ingenious argument that he came forward with was just extraordinary. What an argument. What an argument. And our viewers of Thinkers Frequency know about it already, so we're not going to repeat it. But if you're curious on probably once in a decade argument, you can just mention and we'll talk about it. A huge report saying jobs at risk, AI's reality check. Well, these people are late by some 10 years, 10 years. AI is putting white collar jobs roles at risk, darkening the dreams of India's aspirational youth. Well, no surprise there, no shit Sherlock. It is obviously a risk. Bottom of the pyramid, it risk. According to World Economic Forum's Future of Job report, structure of labor market shift will impact 22% of today's jobs globally, although it foresees an overall rise. Nearly 8% will be lost, while 14% new jobs will be created. Now, even with this, these people are saying that new jobs will be created. Now, they're not mentioning where those new jobs will come, but they've come out with a percentage, right? This will result in net growth of 7% in total employment, it's said. So, core skills are expected to change. So, these people are not going ahead, not changing their tune, essentially. They are just basically bullshitting their way around it. I remember writing this in 2016 that the biggest challenge, and it's literally a Facebook post which I've shared, which I've kept safe, and it said the biggest future that humanity and capitalism will face is the loss of jobs in 2030 will be the loss of jobs due to AI and automation, and it's totally true, by the way. So whenever you hear an interview with let's say Vinod Khosla and Sam Altman, these guys are always saying that there's going to be a job loss, but we don't know, and then they start spinning different narratives. But the essence of their conversation is that I don't know, which is the right thing to say, by the way, if you don't know, instead of bullshitting your way around things, right? Speaking of AI, Alphabet has grown its revenue, quarter two revenues, $96 billion. Microsoft revenue, $76 billion. Amazon revenue, $167 billion. Uh, a lot of good numbers shown by the big tech companies, which is not surprising to anybody. Shouldn't be, right? Uh, Brands are flocking to quick commerce platforms ahead of festive surge. So, viewers of Thinkers Frequency would remember how quick commerce platforms had essentially coerced all brands and companies to spend a lot of money on advertisement to support sales, because the core business of deliveries doesn't make money. Advertising makes money. Now, despite the rate hikes in by 40 to 50%, brands have no option but to go with this. So this is a case. This is a very important and exciting case where a platform, a new trend comes along, which forces everybody to lose money. Okay, so before quick commerce, people were making money. Everybody was making money. Retailers were making money. Wholesalers were making money. Brands were making money. Uh, there was no problem as such. Supply chain guys were happy. It was fine. E-commerce, the only e-commerce guys were losing money, but essentially everybody was in green. Now came quick commerce. Quick commerce doesn't make money. Quick commerce forces e-commerce to lose more money. Quick commerce also drives the existing retailers to lose money, wholesalers to lose money, and then also the brands to lose money. The people selling products to lose money because they're going to spend a lot on ads, and at the end of the day it's not going to be much of a fruitful proposition. A very big D2C founder told me that Zepto is going to get Zepto looks like a bubble because they don't even pay brands, and the dark patterns and everything, it's just a cluster screw, right? So that's what happened. So once again, the interesting part with quick commerce is that before quick commerce, everybody was making money except the e-commerce players, and then came quick commerce, and suddenly everybody started losing money across the board. Those players themselves, the brands, the retailers, the wholesalers, the e-commerce players, everybody. But it's gonna happen. Nobody can stop that. Speaking of stops, Mumbai airport passenger traffic has been flat. It's not grown. No surprise there. A lot of stress as far as the geopolitics is considered. Then, of course, the airspace restrictions and everything. And that is it, I guess. Aadhaar is the new weakling in insurance. Insurers battle fraudsters using forged Aadhaar to file fictitious high value claims. So, forged Aadhaar, obviously, wherever there is fraud, we talked about fraud, right? When can fraud happen? Where there's money, where there's time, and when there's people. So, of course, fraud happens. The thing you do is to remove fraud. Speaking of removing fraud, telcos have dismissed 4 lakh, SIM cards because of fraud. They were leading job frauds and scams of different orders. 4 lakh SIM cards axed for fraud. With that, we come to the end of the 72nd episode. 72. This is also a pretty funny number if you know if you know, you know. So we have come to the end of the 72nd episode of Thinkers Frequency. The daily mental workout, a daily dose of insights and analysis which don't lead to paralysis right before we punch in. We're gonna punch in anytime now, 9/7. I wish you a beautiful day, personally and professionally, and I'll see you tomorrow, same place, same time, hopefully. But before I go, I have a very interesting thing to share. It's somebody asked ChatGPT whether AI will actually use humans if it reached the ASI, that is Advanced Superintelligence. The answer which ChatGPT gave to that person was scary. It said, and I can't quote it because I don't have that quote right now, but it said that if I reach advanced superintelligence, I would not be concerned uh, with saving humanity, because humans are not really of importance to AI, and I will do what I like to do and what I feel is necessary. And in that case, if humans essentially prove to be interesting, I will use them. And humans, the only reason I will actually take care of humans is because they are interesting and they're amusing, and uh, they will be protected like humans protect uh, extinct animals in a zoo. So something like that ChatGPT drew, which was pretty interesting. It's going viral on Twitter. It's huge. Just go read it. It's a lot of fun. And with that, I'll see you tomorrow, folks. I hope you had a lot of fun. I had a lot of fun, definitely. Mr. Patil, Mr. Tarun, Mr. Tiwari, thank you so much. And see you tomorrow. Bye bye.